But
Yeah, my
let's
loan
just say
should start
2027 onwards, yes, the rate goes to 4.5 or let's just say 4.8. You're in trouble. Why should I need MLTA if my home loan already get
MRTA?
So first thing, actually, I'll actually ask you, do you know if your sum coverage is the same as the loan amount you take? Second question is the loan tenure the same?
How about this? I will be the example. Then you are the teacher. So I have a housing loan of 500,000. I am 30 years old right now. I took a housing loan of 35 years. My MRTA coverage is 500,000, but I need a cover for 10 years. Okay, why I choose this? Because the banker told me that's the maximum coverage they can provide, like the 5% where we do the financing. That's the maximum 5% that is allocated, and it's worth around 20,000.
So normally for this MRTA, right? Yes, it's good. Your coverage is 500,000, your MRTA is 500,000. But you see the difference here is not. Your loan is 35 years and your MRTA is just 10 years. So a lot of times, right, this thing, your contract doesn't tell you actually how it works. So if you have a 500,000 loan, right? So let me just show you this chart. Okay, so this is a 500,000 loan. You're supposed to finance your tenure for 35 years. So MRTA, as you know, is a reducing one. King, assuming your rate is a 4.2%. So banks, right, if you buy the MRTA separately, then the agent or the banker will actually put the MRTA rate and reducing at a higher one. A lot of times, right, MRTA you finance a loan, let's just say now 2025, your effective rate it's 4.1%. Your reducing chart, right, is actually based on 4.1%. But 2025, your 35 years until you finish the tenure, it's not fixed at 4.1%. Everyone also know that bank's rate is not fixed.
Correct.
It's fluctuation based on BR. This chart predicts you at a 4.1% rate. If let's just say 2026, 2027, the interest rate goes higher, 5%. MRTA, once your contract is signed, right, you can't change the rate one. So let's just say the next 3 to 5 years, the rate increases. Then do you think your MRTA, right, will cover full or not? Even if you put 35 years, right, it will not cover. So because just a normal logic thinking, this is a 4.1% reducing chart, which means every year I pay the installment, it will follow this chart. But let's just say 2027 onwards, yes, the rate goes to 4.5 or let's just say 4.8. You're in trouble. So maybe at some parts of the year, let's say the third year, right, your MRTA chart supposedly maybe the surrender coverage is actually at 470,000 example. But because of the interest rate increase, right, bank side, you actually owe them about like 480. So like, okay, still can because the gap is just like 10k difference. But is it worth me if you already have this 35 years MRTA but it's not covered full?
But what happens if the illustration is my MRTA is 10 years?
So imagine, so this is a 500,000, 10 years MRTA. This is supposed to be a 35 years MRTA versus a 10 years MRTA that you have. If a bank is going to cover you 5,000 for the 10 years, right, how much is the second year death benefit here going to be? So 10% drop because you divide by 10 So this will be 450,000. Then the third year here will be 4,000 Let's just say something happened to the third year. Do you think your bank you've been paying for the 3 years, right, drop so much 100,000?
No.
The moment you have a 35 years loan tenure, if your MRTA does not cover even 35 years, right, the second year onwards, you are at your own risk already.
Meaning that the insurance payout is not sufficient to cover my loan already.
Correct, because they based on the MRTA's reducing chart. And a lot of times when they give you the letter offer, right, they only tell you the in words, but they never show you the chart.
The reducing chart.
Of how much you're going to pay the second year and third years.
But does it mean MRTA is not good because it's reducing?
No. In MRTA and MLTA, right, there's no good or bad policy. There's only a bad policy if it's not enforced. That's what insurance we always say. Even if you have a minor coverage, we still cover you. But come back to the questions. If you buy this MRTA, your main purpose is to, if anything happens, you don't have to further pay any more money to the bank. That's why you have the ML or the MRTA.